Hi, everyone. This is Nancy Barnett, and welcome to our presentation today. We're going to talk about the CARES Act. Even if you didn't get the PPP or haven't applied, there are things that are going to help you with that. And then we're also going to talk about the PP Act and how to use it effectively. So first of all, I want to talk to you guys. I want to have something to do something. And that is, there is a poll question that we need you to, it's a disclaimer that basically is saying that this is for planning purposes only. It's not an official webinar. We're not the government. So we're here to give you the best information we have at this moment. So if you can read that and click it on and move forward, we'll be ready to go.
We're still collecting. There's just a couple that haven't, but we're almost there.
Okay, are we ready to go?
We've got 86% voted, right? All right, so it's closed and we'll share it. Okay.
Okay. Okay, so first of all, some of you may be familiar with the SBDC and some of you may not. So I want to give you a little information about what the Small Business Development Office is. They are a nonprofit. There are 15 offices in the state of Colorado, and there are actually 900 to 1,000 of them in the United States. They can offer, and we offer as a part of that, one-on-one free consulting. So as we're going not just through COVID-19, but to help you grow your business, sometimes pivot your business in this case, or any of those things that we can help you with, from marketing to social media and whatever, and accounting, we have people who can help you for free. And we also offer education, which this is a part of, and training to help you be the best you can be, even in these trying times. So that's what the SBDC does. So just so you know,
there we go.
There we go. I had a computer die today, so or almost, and so we are working through this as we go through. So again, my name is Nancy Barnett. I'm an SBDC consultant. I've been a consultant for the SBDC for about 10 years now, and I also own. I'm a co-owner of APIS Business Solutions, which is an accounting company, and EL3, which is a training company. Susie, would you like to introduce yourself real quick?
Sure. Hi, I'm Susie Schutz, Nancy's business partner in those two businesses that she mentioned. And my main role is running APIS Business Solutions, so bookkeeping and accounting firm. And I'm glad to be here today and to help you sort of understand some of the tasks that need to happen, and hopefully I can help you figure out the best way to keep track, so that as you're moving through this process, you have good accounting records to back it up.
Christy, you want to introduce yourself?
Hi, Christy Barnett, and I've been with the SBDC, I guess I'm creeping up on a year. Do bookkeeping, accounting, flying by my seat of my pants just like everybody else on this with all the rules changing and everything. So it's nice to be part of the SBDC where there's a group of us who can like lean on each other and like, hey, have you heard? Have you heard? Like, oh yeah.
Oh, here we are.
So
So,
yeah, here we are.
all right. So we're going to cover a lot today, actually a huge amount, which means that we're not going to probably be able to answer all of the questions that you're going to have, but we're going to do the best we can. So when you have questions, certainly put them, there's a place for you to put those questions in, and I'll pause every once in a while and see what questions are on the deck. Just understand that some of the questions we can answer and some of them we can't. This is a fluid situation, and we want to give you the best information as possible. So my other advice is stay connected with the SBDC. We will continue to publish information and give you all the information we possibly can as soon as we can from trusted resources. So today we're going to cover a few things. We're going to cover the CARES Act in general. So there are some things that apply to all of you as a small business owner, what you can and cannot do, what you can take advantage of, and so forth. And then there is the actual Payroll Protection Program. I know that some of you on this call have received those funds. Some of you have been approved to receive those funds. And of course, some of you are probably waiting as well. So we're going to talk about that. And then we're going to talk about when you get the loan, how are you going to manage it? What are the ways to make sure that you stay within the perimeters? And we want to give you some not only education, but we're also going to give you some tools to help you do that as we move forward with this. So that's the plan for today. So I looked at this presentation and I thought, oh my gosh, this is tough stuff, and this is also sometimes dry material. And so I thought about the Wizard of Oz. Actually, Christy came up with that, but we all know the story. Dorothy was happy in Kansas, and she loved her family and her home. And every once in a while, she thought about what was over the rainbow, but that was part of her planning adventure. However, a tornado lifted her from Kansas and took her to a strange land called the Land of Oz. In our case, it's called the land of COVID-19. The things that she thought were going to be weren't going to be. So Dorothy landed on a bad witch in a strange land with different people and different characters and different rules. And she knew immediately it wasn't where she wanted to be. She wanted to be where there's no place like home. And she wanted to go back, but she didn't know how to get there. But she was determined to do so. So eventually she was directed to follow the yellow brick road and to see the wizard and hopefully get her problem solved. So she's facing the unknowns, but she believes that she won't stop until she gets there. As small business owners, we're all Dorothy, and we loved our business. We love what it does for us. We love where we have been. We love our clients. We love our customers, and we worked really hard on it. And then one day, everything changed, and it wasn't our fault. And now we're asked to do things we've never been asked to do, but we're ready for it. We're going to make it happen. What we want you to know is you don't have to do this by yourself. You don't have to do this alone. So we're ready to take the journey with you. So let's go forward. Susie, what happened to my wizard screen? Where did it go? Thank you. All right, let's go to the next one. No, now you're back.
No,
It's not going?
no, that's it. It goes from here to here.
Oh, this is awesome. Okay, share the screen back with me.
So you're saying I'm not a good Vanna?
I'm saying you're not a good Vanna. I'm firing you.
You're a
We're gonna see
beautiful Vanna, though.
She is a beautiful Vanna. Okay. Okay. What do you guys see on the screen? Tell me.
I see your guys' faces.
Okay, hold on.
That's not what we want to see. I love you, but
I'm getting there, just a moment. Now you're the presenter, Nancy, and you can share your
I can
screen.
show my screen. I can do that. Are we on?
Yes, you're good.
Okay. All right. So here we go. Technology does work every once in a while. So what you have to, as a business owner, remember that these rules are going to be changing. They're probably changing as we're having this seminar. And it's going to be your job to stay on top of things. And also, from an accounting perspective, your accounting and your bookkeeping are probably more important than they've ever been. So if they're not where you needed to be, work on getting them to where they need to be. Don't assume that even your bookkeepers, and if you have a bookkeeper and a CPA, that everybody's up on these rules. Part of what this class is today is to give you just an awareness, so you have questions to ask. You know, you can ask about that thing and ask and double check is all I have to say. There are many unresolved consequences. Anytime you pass something as quickly as what's been passed, it's like, whoa, didn't know it affected this, didn't know it affected that. And again, it causes us great angst. So you can always make an appointment with one of the consultants. And again, we're not going to know the answers, all of them, but we have resources and we will work to get those questions answered for you. So what we're going to cover today is the Extended Family and Medical Leave Act. They extended how that works, how to get a forgivable loan, and what tax credits are available for your business or may be available for your business. We're also going to talk about some options you have. As we all know, managing our money and managing all of this right now is going to be primary. So how, if you decide to, you can defer your share of the Social Security taxes for a bit. There are also some expanded write-offs for improving your property if you're a restaurant or retailer. There are also expanded unemployment benefits for small business owners and self-employed individuals. And there's some tax breaks on operating losses, and you certainly will have an extension. We already know you have an extension to file your taxes. Okay, so that's the basics of it, but now we'll break it down. So this applies to some of you and some of you not. Okay, so it's what's really, whoops, how did I do that? What do you guys see now? My screen that has all of our pretty faces on it, right?
No, we're still seeing your slide.
Oh, okay. I love my computer right now.
One of the challenges.
Okay, so one of the things to think about here with if you're a sole proprietor or a gig worker, there are going to be some special rules that apply to you. Depending on the size of your company, there are also going to be some rules that apply to you. So for instance, they have, under the CARES Act, they have expanded the family and medical leave benefits. So it used to apply to a certain group of businesses. Now they've expanded to businesses who have fewer than 500 employees, okay? However, if you have 50 employees or less, you can apply for an exemption if you can say that these rules hurt you financially or jeopardize your business, which for many of you that's not going to be an issue. The payroll tax, there's a new rule that when it comes to sick leave, when it comes to people being, one of your employees gets sick with COVID-19, or if you get sick with COVID-19, that you are entitled to sick pay, all right? So with sick pay, what that means is it's 80 hours, and we'll go into that in a minute, but that's never applied to employed people. In this case, you as a self-employed person, you can actually get a tax break and give yourself some sick pay. So one of the things I want you guys to remember is to start using resources. And you will see at the bottom of this screen, there is a link, if you will, to the Department of Labor. So I advise you to go to that link and to read from exactly what the Department of Labor is saying about this act. This one is really complicated. We don't have time to go into it today, but the information is there, and it's going to be really important for those of you to learn more about this, but you get it from the Department of Labor, not from Facebook. So what it means to you is that anyone who is sick for COVID-19, you can receive up to 2 weeks, which is 80 hours. You can receive up to 2 weeks of paid sick leave that is covered 100%, dollar for dollar refundable tax credit available to the employer. Okay. This also covers employees who are providing caregiving duties to someone who is impacted by COVID-19. Their rules are a little different. So if it's you that are sick or one of your employees is sick, you will get the tax credit up to $511 per day for a total of 10 days. Okay. If your person is taking care of someone, okay, they are also entitled, they could get 80 hours of pay, but in that case, it only goes up to 2/3 of the employee's wages, up to $200 a day for 10 days. There is also a rule that says that if the employees who have worked for you for 30 days, up to when this happened, they may also receive an additional 10 weeks of paid leave if they are unable to work because of their school or child care provider is closed or unavailable. But also remember that you have an opportunity to be exempt from this as well. So the date they are using for all of this calculation is April 1st. So if you closed your work site on or after April 1st, this does not apply, okay? And unemployment becomes an option. If the employee has been furloughed after April 1st, no sick pay or extended family leave is also part of this, okay? So again, I want you to look at this, understand it may or may not apply to you, and you may or may not be able to take advantage of it depending on your particular situation. So there are incentives available, okay, for tax credits. So businesses will get a tax credit for keeping, and this is if you don't get the loan. Okay, so you didn't get the loan, you didn't apply for it, you're still going to be able to get these tax credits. So businesses will get a tax credit for keeping idle workers on their payroll during COVID-19. The tax credit will be worth up to half of what the company spends on wages up to $5,000 per worker. Now remember this, the Payroll Paycheck Protection Act, it only covers 2 months. We're talking 8 weeks. Okay, so this would be the same for that. So to qualify, the business must prove they took a 50% loss compared to the same quarter in the past year. So, however, if you get the PPP loan, you're not able to accept this tax credit. Okay?
No double dipping.
No double dipping. They really frown on that from all angles, if you will. This is
not
also
safe to double dip anymore.
what's that?
It's not safe to double dip anymore.
No, it's not. That's one thing you don't want to do. You don't want to do. So this applies to everyone. Okay. So it's a Social Security tax deferral. So if you are have people on the payroll and you're collecting your portion of the Social Security tax, you have an option. Okay. You have to collect it, but Social Security and Medicare taxes, you can collect it all. They're going to be due as usual. Okay. However, you as the employer, you can pay the deferred Social Security tax. You can prorate it out, basically pay it later over the following 2 years. Half by December 31st, 2001, and half by 2022. It's really important, and Susie, you might want to add to this. It's really important to think about this, okay, and make sure that that's the best decision for you under those circumstances. Susie, you want to add anything to that?
Sure, and I think just to make it super clear, the amount you can defer is not what you withheld from your employees' wages, but only the amount that the company matches. And so your expense is what the other is held in trust for your employees, so that needs to be paid. And I think what Nancy's talking about too is just be mindful that if you're deferring the payments on this, you're going to have to pay it eventually. So if you, for instance, if you got the PPP loan, if you were lucky enough, or if you have the ability to pay the tax, I would still try to pay it on time, because you don't know how your business might be affected in the future and how your cash flow is going to be affected. So you just need to make sure that if you're going to defer this, that you have a plan in place to be able to pay that later.
Yeah, or you can even like maybe sandbag the money if you wanted to, like, you know, a separate account, whatever you got to do to like make sure that you will have that when you need it.
Correct.
Yeah, you don't touch it. You don't think of it as operating capital somewhere along the line.
Right, but perhaps you can, yeah, that might be an idea where you sandbag it, because you think, well, you know, gosh, in a couple months, I know I have a contract that's going to come through, and I'll be in a more comfortable place to pay it. But just remember, it's just a deferral. It's not it's not excusing you from the expense.
So I don't know if we have any distilleries here, okay, but this just shows you how the laws are trying to come up with some ways to compensate some of our companies that are struggling. So one is the new hand sanitizing production companies. They've come from our distilleries, and so they're using their their big fancy machines, if you will, to provide us with hand sanitizers that we'll probably need for quite some time. So in the relief bill, there was a temporary exemption from excise taxes, which, as I understand it, are pretty hefty on alcohol for those companies that are using their alcohol to make hand sanitizers. So just in case any of you are, there you go.
And Nancy,
So,
I think that it's a good thing to mention at this point. This is where you really need to talk to your CPA also, They're
Yes.
following what the tax credits will be and what additional help you will be getting. And so I would really have discussions with them and make sure that you understand what's available to your industry, because there's just so much information out there. It's hard to follow it all, but that's what they live and breathe by, is watching, is helping you from a tax perspective. So I would definitely call your CPA and see if you can get a meeting to discuss what's best for you.
And that's going to be subject to change as well, because what I see on a lot of CPA boards where they're discussing this, like anything else, when a bill gets passed, and certainly one of this consequence, they are starting to figure, they're doing the what ifs, and they're starting to say, well, how does this get handled, and what if? And then they're the ones that are asking other powers to be to help figure that out. And so we'll certainly be getting information from the CPAs as well, but it's going to be really important to pay attention to that, because some of these consequences aren't going to be seen right away. They're going to be seen a month, 2 months, 3 months from now. Okay. So one of the things that we get a lot of questions about, and this something that we never ever did before, is unemployment benefits changed. For the first time, independent contractors and self-employed people are covered. So that has been huge. So currently, the unemployment, the last time I talked with the unemployment, or a person with the unemployment, is they are processing anywhere between 20,000, Colorado is processing anywhere between 20 and 25,000 applications a day. And just to put that in context, the week before everything shut down, they were processing 2,000 a week. So that gives you an idea of the stressors that are happening on that situation as well. What the CARES Act did is they expanded unemployment. So every state, normal employment, they determine based on what you were making at your last job, and they go back like 5 quarters, and they look at that and they average it out, and they say you are entitled up to X amount of dollars. So be it $400 or $375 or whatever it happens to be, okay? And then the CARES Act added $600 a week for 4 months, so to the end of July, to add on to those state benefits, okay? So if you apply for unemployment as an independent contractor, self-employed person, they will, based on basically what your profit has been, they will determine that you are entitled to $300 a month, $300 a week in unemployment, and then the $600 is added onto that. The Colorado unemployment itself has been extended to up to 39 weeks. That 600 is going to drop off, like I said, at the end of July. If you, and I just found this out just about 2 hours ago, if you choose to work while you're on unemployment, let's say you take a couple of shifts or something like that, that $600 for that week will not be there. Okay, so I think that's probably fairly important to know. But if you're self-employed, and if you are you've been an Uber driver, whatever, you are entitled to unemployment. So this is your tax stuff, and right now it may seem a little overwhelming, but how they calculate your losses does have an impact on what you pay and what you owe. So one of the things that the relief bill does is it takes some of the rules that were in place and it loosened them up, and it made it easier for you to carry them. So it will help you long term. So in this case, it allows you to carry your net operating losses from 2018, 2019, and 2020 back 5 years. So again, going back to, and you'll hear this a lot, in talking to your tax professionals are the ones that are going to be able to tell you, based on your situation, based on what is happening in your business, what is the best strategy for you. One of the values of a CPA is strategy. And one of the things that you have to think of from all angles in today's environment is strategy. How am I going to do this? What's the best option for me? And so you can make the best decisions for your particular situation. Colleen, do we have any questions? Not hearing Colleen.
Colleen?
Yes, we have questions.
Okay.
Can you see the questions, Nancy?
Yeah, I can hear them. I can't see them. I can hear them. I can hear you. So if you can
Okay.
read it.
Well, they mostly want to know, will the slides be available for download on your website?
Say that
later on?
again.
Yes.
Will the slides be available later? Yes.
Yes. So all the slides will be available. All of the actual tape webinar will be available. And then also the cash flow, what Susie put together, that will be available. And then if you need it and it's easier, I can add, or we can add to it those links that I have on the screens. We can add that as well. Does that help?
I think so. And then Tiffany had a question. I'm not really sure what she meant. Maybe we could unmute her and have her explain what she's asking.
Okay.
She said, I can apply to not pay the 2-week sick pay for staff under 50 people. So let's talk to Tiffany. It's up to.
Hey,
I can,
can you hear me?
yeah, I can hear you.
Okay, it was at the very beginning of your presentation, and I can jump on the Department of Labor, whatever that website was.
Oh,
I
okay.
screenshot it too. But I
Yeah.
was just, I've been very concerned if one of my staff gets sick to actually cover the expense of her 2 weeks, like paid time off. And I think you were saying that possibly that I can apply to not pay for that because I'm under 50 employees.
Yeah. Yeah. If you have under 50 employees, you can, you'll be able to apply for, and again, these will get more clarified, but you'll be able to apply for an exemption. Okay, which basically you say having to do this would jeopardize my financial health of the business. And but that's 50 employees or less. And I'm thinking, if I remember, Tiffany, you got less than 50 employees.
Yeah, I totally do.
Okay.
I'll jump on their website and look into that some more.
Yeah. So that's why I put that website on there, because they be in some of these websites, and I'm sending you to, even though it's the Department of Labor or the IRS or whatever, even on some of these websites, they are telling you that some of these things will continue to change. So, but those are the places that you want to go.
Okay, perfect. Thank you.
Don't
You're
take
welcome.
it personally, but I'm going to mute you again, Tiffany.
No problem.
Okay, you're silenced.
All right. With that,
Nancy, we had one more question for the actual link to the slides.
Yeah.
Yeah. So we'll get the link to them.
Yeah, we'll put that in the return thing, and make sure you have all those links as well.
Okay.
Because again, what's really important here is, unfortunately, you guys are the researcher. We can back you up, but you're the researcher as well. Okay.
Right.
All right. So
And can I ask for the participants on that, on there, they should have, I believe, because we're learning as we go on this tool, but you should have a pop-up screen, a panel, and I believe that there is, you should have handouts. But if not, we'll make sure that we get those to you.
okay. So I think most of you already know this, but there's an extension of time to file your 2019 taxes. So they've been backed off about 90 days. So taxpayers don't have to file an extension until until July, but you can also, I notice I just did that, July 15th, and then you can also file an extension after that to get to October if you need to. Okay, so let's talk about this PPP plan and what it covers, and just as importantly, what it doesn't. So initially it was put out in two rounds, if you will. So the first round was $350 billion. And as we know, those of you who applied, it was coming through the banks. The whole idea from the SBA is they realized that after they tried to release the economic injury disaster loan, the EIDL loan through the SBA itself, they didn't have enough funnels to do so. So they went to the banks, the SBA approved the banks, if you will, lender banks, who already had the funnels. And they basically said, okay, we're going to put you guys in charge of this and helping this, get this through. And then in April 23rd, another 350 billion was added to the program, and it was reopened on April 28th. In case anybody wants to know, the EIDL loan has been shut down with the exception of agriculture. The money, if you're already in the queue, you're in the queue, but they're not accepting any more applications, although they got extra money as well in the process. So all small businesses are eligible. All right. So even, it's for companies 500 employees or less, down to 1 employee, which could be you as a sole proprietor. The loan itself has a maturity rate of 2 years at an interest rate of 1%. The need to make, there's no need to make payments for 6 months. So in actuality, it's a loan of 1% for 18 months if you don't get it forgiven. Okay. One of the big key things here that has never been done before is they didn't ask for any collateral or personal guarantees. Some of you who have got business loans from the bank, either guaranteed by the SBA or not, were often required to give personal collateral, and that wasn't something they had to do this time. So there's no fees. The loan covers expenses up to 8 weeks, starting from the loan origination date if the obligations began before 15/2020. So they only started, that's February 15. There's 2 days, February 15 and February 20 comes up a lot. Those are two, but it's February 15. It is a loan when you get it. So when you sign those papers, it is a loan, okay? But it can be returned, it can be forgiven, and that's what we're gonna talk about today.
And
one
Nancy,
of the things,
can I add
yeah,
something? I'm sorry. So
okay.
the one thing they need to know is that if there's any amount that is not forgiven, that's what turns into a loan.
Yes.
The 1% interest starts at the date you received the money,
Yes.
not the date that you have to start making payments.
Correct.
Whatever amount is a loan, they will have that 1% interest or on that going back to the date that the money hit their bank.
Right. And the reason, one of the reasons for the way that it was structured this way is this whole paycheck protection idea was to basically tether employees back to their employment. Okay, so for a lot of employees, you as business owners, you've put a lot of years of training into some of your employees. You developed a relationship. They know your customers and your clients, and they'd be hard to replace. So keeping good employees is critical for any successful business. And also too, if employees get laid off and apply for unemployment, they lose all their other benefits. So if your company has been doing things such as, health care, vacation, sick pay accrual, 401k match, any of that, that basically stops when an employee is laid off. So with a PPP loan, employers can bring back those employees and continue to keep those employees, and the employees win because they get their benefit package back. Okay. It's also going to be important to understand that when you ask employees to come back, they don't have to necessarily do the tasks they did when maybe you were fully open, right? So for instance, let's say you have a server in your restaurant and you're not going to need all the servers back. I mean, technically, maybe you're starting to open up a little bit, or in a few weeks you're going to be able to open up, and how that works on a limited basis. So if the employee has the skills, because this is just something they do, maybe they're good at web design. And so you can ask them to help work on your website. They don't necessarily have to be a server, but you do have to pay them their normal wages. Another thing that people are asking is, like, what kind of order do I bring people back? And maybe I think a lot of you are worried about exposing some of your people to COVID-19. And so you can stagger how you bring people back. And when I say stagger, what I mean is, let's say you have a person that's over 65, that's been working for you. You can bring them back a little later than someone else. Same thing with an immune system. So you can manage that a little bit as this goes forward. So again, who qualifies? Any business under 500 employees. You can be organized as a C-Corp, S-Corp, LLC, single and multiple members, sole proprietors, independent contractors, self-employed individuals, and basically what that means is everybody. Okay, pretty much. So qualifying is just one piece of the puzzle. And one of the things I hear from my clients is basically, I've qualified, and this is what I'm starting to get now. I've qualified, they've said I get the loan. Is it the best answer for me? Is it what I should really do? All of you are going to be affected differently by this pandemic. So you have to look at your business future and really think it through. So first step is what we're doing today, is know your options. And then you're going to want to assess how every option affects your business in particular. And then you want to develop a strategic plan for today and the future. So one of the things we want you to start thinking about is, this is a holding pattern. If you take, doing this loan is a holding pattern. What may I have to look at in the future to change what I do, to change how we operate? Do we need to focus more on this part of the business rather than maybe the part we were doing before? And then also use all available resources. The SBDC consultants, we can help you think through that process. We're not going to make a decision for you or any of those kinds of things, but we can just help you almost think out loud about, so you can, and give you the information we have. The bottom line, that decision needs to be you. So it's interesting is what happened after the first, and many of you know this, when they first opened up the first group of money. Let's just say that there was a lot of information out there about some companies taking advantage of it that maybe didn't necessarily need it. Some of you may have heard about publicly traded companies like Ruth Chris or Shake Shack, and they ended up determining to give that money back. What the CARES Act said was initially is what they did is they suspended the ordinary. There was a requirement that said borrowers must be able, anytime I got an SBA loan, a guarantee of a loan, it said I must not be able to obtain credit elsewhere. And so if you're doing this loan, you've been asked to certify that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Okay, so and you're signing that in good faith. All right. One of the things that they have determined, okay, is that, whoops, let me go back here. One of the things that they've determined is that Chase, we got an email from Chase, and one of the things that they determined, and they wanted to like kind of put in bold letters or whatever, make sure you want to take this loan, make sure you know what you're saying, that you couldn't get money someplace else. And another piece of that email basically was saying it would be very difficult for publicly traded companies to be able to say they could not get cash elsewhere. So, and also during this period of time, they opened up funding opportunities so you can apply not only to current SBA lenders, but they opened it up to our micro lenders, Colorado Funding, Colorado Enterprise, DreamSpring, who normally handle SBA loans, but they don't have checking and other bank services. So they weren't included in that first round. And they've started opening them up to, you see some credit unions coming on board and whatever. And the purpose of that is to get the money down to our small businesses, you know, our people who need this to survive.
And Nancy, they've now
Yeah.
extended that repayment date out another week. So
Oh, they did.
yeah, to give, I can't remember, I'm sorry if it's the May 14th or May 15th, but they did extend that out a week so that people have a little bit more time to find out, was it as dire as I thought it was going to be? So how much do I really need it? Because at the beginning, I think a lot of people applied for the PPP loan, and at that time, we just didn't know how our business was going to be affected. So now
Right.
they're saying if things are different than you at first anticipated, or if you found that perhaps your employee count was a little off, or then you can repay part or all of that loan back. Yeah, and you have the extension until May 15th, I believe it is, to do that.
Right.
If you're just sure that you didn't need the money.
Right. Which is a good thing, right? It's important to do that. So, so the funds, as I think most of you know, this is the PPP loan is very limited in what you can use it for. If you got an idle loan, you have more flexibility in where you spend that money, but that idle loan is a loan and it is not forgiven at this moment. All right. So this one is 75% of your PPP loan is supposed to be used to pay payroll and employee benefit costs. Okay. And then the remaining 25% can be paid on mortgage interest payments, rent and lease, utilities. So if you stick to those guidelines and you're able to stick to those guidelines, it should be 100% forgiven loan. But you are going to have to submit paperwork to show that in fact does that.
Well, and I would say here, Nancy, that it's not just that 75% was used for payroll and 25 was used for the other expenses, but there's a lot of qualifications. So
Yes.
you have to have retained the correct amount of employees, and you couldn't have reduced their wages. There's lots of variables there. So it's not a guarantee of 100%, but as long as you meet all of the requirements, which may be subject to change, then you can expect to have it forgiven.
Right, and there's still some questions out there, for instance, about what rent means, okay? And what lease means. So does that include rent on equipment? And exactly what the personal part means. So there's still some questions about that hopefully will get resolved in the near future.
And whatever you do, just take, notes, during this time, classify stuff, keep the paperwork, because as things do change and go on, you might have to go back and make adjustments, or you might get additional benefits for something. So if you keep track of it, you know where to find it, and you kept good diligent notes on stuff, then you can get back to that spot without giving yourself too much brain damage.
Yeah, that's a very good point.
So it's called document. And you can't, in this case, you probably can't over document. Okay.
Yeah, paperwork is your friend right now.
Yeah, it is. You want to have a paper trail, so to speak. So one of the questions that comes up a lot is, do owner draws count as salary in a PPP program? So it's really important for you guys to understand how you're organized. Okay. So, and how you set your business up. So there's always, when you set your business up, there's a legal side to it, and then there was a tax side to it. So if you are an SCorp, and as you are an employee of your company, or you're an LLC, but you are taxed as an SCorp, and you are paying payroll, you are an employee of your company, and you're receiving a W-2. That is going to be different than a lot of people who are sole proprietors, or their LLCs taxed as a sole proprietor or a partnership, and they've been basically taking draws, out of their account and paying themselves with a draw, just pulling it out of their business account, moving it to their personal account. It's considered a draw. So they look at an owner's draw as not salary. So in that case, they look at how they figure this is going to be really different. All right. So in this case, depending on how you are organized and how you pay yourself is going to depend on how much money you can pay yourself, okay, as the owner of the company. So for instance,
Nancy, can I add to that for a second?
Yeah.
So if you're self-employed, and when you were trying to figure out, because you don't give yourself if you're not treated as an S-corp and you don't give yourself a paycheck, when you filled out the PP loan application, or if you're still, I don't know that there's funds available, but the way that you figured out what your PPP loan would be was based on your 2019 profit.
correct.
So
Correct.
so that decided how much your pay was. So now you're into 2020, you're still not an employee, you still don't use a payroll service. So you're allowed to give yourself a check or a draw of the amount equal to what you were qualified for in the PPP loan. So you don't have to go out and get a payroll service now and turn into you don't have to do that, but you're going to have to, you don't want to, if you give yourself a draw that is more than you applied for in the PPP loan, then that's going to disqualify part of that. So what we're suggesting is look at what you applied for on the PPP loan and how much you could pay yourself, either weekly or monthly on that, and write yourself a check if we have checks anymore, or do a transfer from your business account to your personal account. You have to have some sort of documentation that you paid yourself that portion of your profit that that you got approved for on the PPP loan.
And there's a formula for that. Okay,
Yeah,
so
on my spreadsheet, I have that for them. But
yeah, and there's a formula here too as well. So again, if you're been doing your business, file your taxes as an LLC or sole proprietor, it's going to be based your PPP, what they gave you, okay, or at least that part of it, okay, is going to be based on what your profit was. All right. So in this case, your payroll cost for your PPP will be the earnings you were taxed on. As an owner of an LLC, this is the full amount of your net profit, not your owner draws. They just don't count. If you are a sole owner of a business taxed as an LLC, your salary for your PPP application should be the full amount of your business net profit in 2019, and you should leave your member draws out of this equation entirely. If the amount is negative and you don't have employees, then you wouldn't be, you would have considered getting an idle loan, or get unemployment, because this PPP loan will not work for you. Okay. If you are one of a multiple managing members of a business taxed as an LLC, your salaries will include the business profits of 2019, and then it will be divided by whatever split the owners have. It is 50-50, 40-60, whatever it is, and that shows up on your K1 taxes. So this is where it gets also a little confusing as well. If you file taxes as an SCorp or a C-Corp, and you can be an LLC that is taxed as an SCorp as well, this applies to you, okay? So I don't know if anybody there that we're talking to is a C-Corp. I probably not. If you are, how you pay a little bit different. Your dividends aren't considered your salary. It's only what you take that shows up on that W-2. So understand that if your business is taxed as an S-Corp, you're required to pay yourself a reasonable salary through payroll. That's why you elected to be taxed as an S-Corp, meaning that your payroll taxes, you paid payroll taxes on that amount, okay? You can take additional distributions to that, but your distributions won't count in how they determine what your payroll is. It is only going to come from what you've been paying yourself, okay, on that W-2. Susie, you want to add something to that?
yeah, and I would say, so I was on another webinar yesterday, and people said, well, can I give myself a raise? So that I can use more, because maybe so I can take advantage more of this PPP loan forgiveness. And bottom line is, if you're going to do something like that, you better be able to back it up with a reasonable explanation of why it made sense for you to give yourself a raise. Sometimes we're going to give our employees a raise, or maybe we're going to give them a little bit of extra pay or extra incentive because they're coming.
Hazard pay,
or hazard pay, something like that. I think would be much easier to explain than giving yourself a raise. And so just be mindful. Don't try to be so clever that you end up not, that it gets you in trouble. But so think about that.
If you did take on like additional responsibilities, with yourself, because you couldn't have that employee couldn't work for you anymore, you couldn't get them back or couldn't afford them or whatnot. So you took on additional responsibilities. You could prove that, and then that would be, but you can't give yourself, $1 million.
Right. No, but that's a good point. You may have had an employee that had a role in your company, and they have quit, or, you know, have you've offered, they went on unemployment, you can bring them back now because you have the PPP funds, but they choose not to come back. So now someone has to take over those duties. That might be an example. Just don't try to be too clever. Be careful, be mindful, and be cautious.
And if in doubt, ask a CPA is my best advice to that.
And then
Right.
there's also caps on all that salary stuff.
Correct.
Yes, $100,000, yeah. So determining your salary, again, is limited to the wages you were taxed on. And again, it's going to go back to your W-2. So if you've been running, and I know, Chrissy, you've seen this, if you've been running your payroll through a payroll company, are they starting to provide some of this information?
Sorry, what was the last part?
With the payroll companies, are they starting to provide some of that information on your on the payrolls?
Yeah, so they'll break it down. COVID sick pay. So
Yeah.
let's say you had employees and you had, you know, 2 of them go out with COVID and you paid them their sick pay. That'll be separate from like the hourly wages or the salary. But usually with a payroll service, they will break down. And depending on the payroll service, you can get just about anything broken down, you know, as far as date wise and whatnot. So.
Right. But I think that with that, right, we just have to be cautious because it's a moving target for them too. And this is new to everyone, and they have to, there's a lot of systems that they have to update to accommodate this. So be patient. But I would say check with, if you use a payroll provider service, then ask them. You probably are already receiving emails from them letting you know that they have some of this reporting capability for you. So that's a great resource when you go to try to figure out the forgiveness part.
So what counts as cost? And so Christy mentioned this. Salary, wages, commissions, and tips, they're capped at $100,000 per employee. Employee benefits include cost of vacation, parental family leave, sick leave allowance for separation, dismissal payments, all of that. Certainly group health care benefits, including insurance premiums and payment of any retirement benefit. Sales and local taxes assessed on compensation, okay, only on compensation. And then for a sole proprietor or independent contractor, wages, same thing, wages, commissions, income, and net earnings from self-employment capped at $100,000 on an annualized basis. And again, this is only going to be for 2 months of that period of time. So what is not covered? Okay. So any payments that you have been making to independent contractors, they're not considered employees. They don't count. Okay. SCorp and SCorp owners who are not on the payroll, so you've just been taking distributions or whatever, you don't count. So it's only that W-2 piece that you can use for your own salary. So here's an example. I won't spend a whole lot of time on it, but it's an example for you. It's basically, let's say it was 100 grand. And you divided it by 12, which came out to about $8,333.33. And so they look at that total, that salary for 2 months, $16,000 plus. It would be the same if you were a sole proprietor or independent contractor without payroll and your net profit was $100,000. So if you're an independent contractor or a sole proprietor, you take that net profit, it's divided by 12. Okay, to come up with that same number. Do we have some questions, Colleen?
Yes.
I bet we do.
Okay. So someone asked if it's possible to appeal the PPP loan amount. They were only awarded 1/3 of the amount on their application.
I don't think so.
Yeah, I don't think so.
You could talk to the banker, the bank that you went to. You can certainly talk to them. The bank is the ones that are they're facilitating that. but it's my understanding that it's actually, they present that to the SBA, and then the SBA certainly has the authority to change that. And they may have looked at some of your numbers and determined that they didn't qualify. So
Right.
it may have been that you were putting draws in there or other things that they look at it and they don't count those.
But I
They
think
only-
if you can get a hold of your banker, which is another very difficult thing to do, and I think it would be worth asking, and just find out why their calculation differed so much from yours. I guess it would just depend on if there's still funds available too.
And then, you know, the thing is your bank is your processor. So those are the guys that are processing the loan. So they should have I would think they would have the information of how that was calculated. You know, but I think when everybody originally did this and they filled out those forms, they filled out those forms based on what they thought was the right answer, right? And sometimes it wasn't the right answer according to what was under whatever the rules are that have been established. So
And they changed those applications a couple of times, so you could have.
yeah,
You know,
no,
It was a delight to just try to get through the application process, that's for sure.
Yeah. I wish I had a better answer for you on that one, but it's certainly, if you can find somebody to ask, and I would think that would be your banker, ask.
Right.
And then share that information with us so we will know. That would be good as well.
Right. All the other questions are pretty specific.
Okay.
Maybe we can see if we have time later.
Okay.
I don't know if we're gonna.
Okay, and what I was saying to you guys who are asking specific questions for your specific situation is make an appointment. Make an appointment. And Christy isn't our only person that handles accounting, but Christy or I can answer some general ones. I'm not an accountant. But we have some other people on our staff. We have people who've been in banking and whatever, and some of them I think are on this call, who could certainly work through some of those questions and give you some help. Okay. So this is how you calculate it. So basically, your monthly average payroll cost in 2019 multiplied by 2.5. This is how they came up with the number, up to a maximum of $10 million. If you're a seasonal employer, which some of you may be, the monthly average will be calculated differently. Susie, you want to explain this a little bit?
Sorry, it's trying to look at questions.
Oh, okay.
So what are you asking me to explain?
About how the seasonal employer works with when they're figuring out how much funding they can receive. This is what it was based on. So it was different.
So what really it comes down to is that this is meant to, if you're a seasonal employer, this is meant to cover a specific period of time. So if your season starts later in the year, you're not affected by this. You wouldn't be eligible. So you have to look at the dates. That's what's very, so you can either do a look back from last year or and try to see, that's really the best way you're going to do it is what would we have expected last year. But if your season doesn't fall within this April 15th to June 30th period, if that's not, if you're more of the winter holiday season, then you would, that would disqualify you for seasonal.
The other thing too is if you didn't start the business, if your business didn't exist before June 30th, 2019, the lender would look at your cost for January and February of 2020. So that's what they would
Right.
base it.
Right. So, and there again, if you're seasonal and it doesn't fall within that period of time, you just don't have any way to apply for
Right.
the
So those of you who've already signed this, you know what it says, but it was basically you were certifying that current economic uncertainty makes the loan necessary to support ongoing operations. The funds will be used to retain workers and maintain payroll and or make mortgage interest, lease, and utility payments. You have not and will not receive another loan under this program. Documentation, so you only get to do it once, at least at this point, unless they change that rule too. Documentation that verifies the number of full-time equivalent employees on payroll and dollar amounts of payroll costs. All of that, you said what it counts and so forth, and then you acknowledge that the lender will calculate the eligible loan amount using the tax documents you submitted. Okay, so, and you also admit that you didn't change it, which I know no one's done, so we'll go with that. So here's the terms, and we talked about these already pretty much, but it gives you some dates here. Mortgage interest, if the mortgage was signed before 15/20/20. Same thing with rent. I had a person that signed the lease agreement on February 1st, 2020. That counts, okay? If they'd signed it February 16th, wouldn't have counted, okay? Your utilities the same way, as long as service began before February 15th, 2020. Those are all available for forgiveness.
And one thing to add here on mortgage interest, it says it's for real and personal property. So what they're talking about in real property, that's real estate. So that'd be your standard mortgage. But also if you have something where you have maybe properties such as machinery that you have financed, then that's what they're considering personal property. Perhaps you have a vehicle that the company owns and you're paying interest on that. That's when that comes into the personal property. Another is that I have heard that utilities from a tax perspective includes telephone. So if you've already applied for the loan, you didn't include it, that's fine. But if you when you go to the forgiveness side, that's where you really are going to want to follow the rules and find out exactly what the SBA is considering utilities, where you might think it's just water and your energy bill, but it may include the telephone. So again, as Christy said, having really good, accurate records and receipts of all the bills that you're paying right now. So that if you're able to add that to the payroll, to the forgiveness part, then you'll be ready for that.
And Susie, on the PP use of funds worksheet,
Yeah.
You can insert line items, right?
Yeah. So when I go through that, I'll show that. Thank you.
Okay.
Yes.
So we're going to cover this really quickly because I want to get to the worksheet too, but and this is be available to you, but all 8 weeks, it's how you compute the 8 weeks starting from the day the first payment was made by your lender. This is not necessarily the date of which you signed the loan agreement, okay? So this is, and Susie will talk about this later too, but depending on your payroll schedule, you may want to adjust the timing of your payroll date to accommodate as many payroll cycles as you can, but you're going to be real careful with that. So one of the examples, if your PPP loan gets deposited in your bank on April 15th, you could only use the funds on expenses incurred during the 8 weeks following April 15th. So the dates are going to be important. And again, the 75-25 rule, and just remember that independent contractors are not included in that payroll cost. So I'm not going to spend a lot of time on this because this is, you can see this from the PowerPoint that you have, but this is a formula that you can use to determine what gets you to that 75%, if you will. and help you figure that out. So here's the rest of that equation to help you with that. Susie, do you want to talk anything about the equation, or do you want to talk more about it in the?
No, yeah, let's keep.
Okay. So again, it must be 75% of payroll. You want to use the most recent quarter they were employed, and the eligible amount of forgiveness will reduce by the difference of the current pay. So here is another link that we'll send you guys, and this goes straight to that and gives you full detail about that. That comes straight from the government. So follow that formula, and we'll include this link in the stuff that we send you guys.
And I guess one thing I would say is that full-time, what is a full-time equivalent? If you
Yes.
have an existing employee handbook that has already designated what you consider, maybe yours is a 30-hour work week, maybe it's a 32-hour, maybe it's a 40-hour work week. So if you have documentation of what that a full-time employee means, then that's going to tell you what that is, what the full-time equivalent is. If not, I would think there's going to be guidance that's going to come out that will probably be will help with us to see, is it in our firm 30 hours a week is considered full-time as opposed to 40. So it just depends on what has been normal in your company and what's documented, and then also the additional guidance that we'll get through this process going into June.
And you have a rehiring grace period. You can rehire any staff that was laid off or put on furlough and reinstate any pay that was decreased. So you may have, your first strategy may have been to decrease pay, right? So you can make your cash flow last longer and still keep your employees. So you can reinstate that pay. So you have a grace period to do that. You have actually until June 30th to reinstate that pay. So
real quick,
yeah, go ahead.
you can also, can't you also like to say you took half the pay because you didn't know if you were going to get the loan or how this was all going to go panned out. So you broke everybody agreed to take half their salary.
Yes.
And then you got the loan, and can you go back and you can make up for what you took from them?
Yes,
or what they opted out not to get?
Yeah, that's my understanding. You make them whole. You have the opportunity to make them
as long
whole.
as it
My
hits
understanding.
as long as you stay in the dates.
Yeah.
Your loan and
Yep.
whatnot.
Yeah, it's the dates that count. So, but they do have a grace period that you can go back to. So, if you're a self-employed person, okay, and you are using this loan to replace lost compensation, you are entitled, again, going back to, you're going to be entitled to use the full amount to replace pay. 8 weeks worth of your 2019 net profit will be eligible for forgiveness. All right. Then they actually gave you technically they gave you 2 more months, 2 more weeks. And that's what you have, whatever that amount is, 2 weeks of that. You are able to use that on mortgage, interest rate, utilities, and those things that we talked about before. Okay. So again, you're the single guy, you're the only person in the business, and your profit was X amount. You get, that's divided by 12, you get 2 months of that, which is 8 weeks, and then you get another 2 weeks added on that for your rent, utilities, or a truck payment, or whatever that is tied to your business. So,
and I think that if you have a home office and you have historically taken the home office deduction as part of your Schedule C, then some of those home office, you wouldn't have rent, but the amounts that you historically have used as a tax deduction, from what I understand, will be eligible for forgiveness.
And one of the things they will not let you do, for instance, let's say you were working at a, you rent a little office space at one of our, WeWorks or whatever, and that's where you were working in 2019. And now, of course, you're at home, and you're going to want to know, can I use that space as a deduction? No, it's pulled straight off your 2019. Okay, so you can't make those changes.
No, correct.
So just so you know, it's that 2019.
Yeah, the safest thing is to kind of let your last tax filing be a lot of your guidance.
It
Yeah.
is.
And
It
then
is.
watch for changes.
Yeah, please. Okay, so it's pretty easy to say there's a lot of challenges in this process, and there's going to continue to be some ambiguities. Okay, all tax consequences haven't been figured out. So yes, there will be the wicked witch and the flying monkeys are still coming at you. Okay, so except that this is not going to be perfect. I'm at home.
Toto.
I'm at home. I wonder who rang the bell. Okay, except it is not perfect. Reliable research, reliable resources, and your own, and this is really important, your own resilience is going to get you through this. All right, because it's not going to be a smooth road. And to expect anything else, I think is probably not the best idea. So one of the things you want to do when you bring people back is you're going to be really clear with them. You want to you want to bring, if you're going to bring them back, provide them, it's only going to provide them a stable employee for 8 weeks, but it will make you eligible for loan forgiveness. Make sure also too that when you're talking to your employees, if they have been on unemployment, that they need to inform unemployment that they have their job back, because again, they can't double dip either. All right, so they'll end up owing unemployment a lot of money if they choose to do that. But again, people don't have to come back for the same functions. They can do different things. You can have them help you in different ways that maybe projects you never had time to work on, those kinds of things. So organizing that's really going to be part of your issue too. But you can actually use it to make your business stronger when we get past this.
And from that perspective, from what I understand, Nancy, exactly what you said. So maybe an employee, you don't have use for an employee, and maybe they can't translate into another position for you, but you could replace them with someone to help you do marketing. Something
Right.
that you're going to need to try to keep the business open and going forward into the future. So you can replace it with a different function and a different person, but to keep that count.
Because a lot of our, for instance, a lot of our restaurants, they were set up for dine-in basically. And of course, we've gone to takeout and delivery, and their websites didn't match that. Maybe their websites hadn't been changed in 5 years, because for 10 years, they didn't need to. And those all need to be updated for now and in the future, because as we go through that's going to be part of it. So it's those kinds of things. One of the things you don't have to do, this is just a suggestion, is to set up because you're going to have to prove that you spent the money on the right stuff. Okay, so having a separate bank account to hold your deposit in will make it easier to track and safeguard you don't spend it on something that you shouldn't have or whatever. So it's just a suggestion. Everybody's different. You guys get to handle your stuff the way you want. But that's kind of our suggestion going forward. All right.
And I think it's especially true if you need to sort of out of sight, out of mind. So if you keep if you have the funds in a separate account, maybe it's deposited into a savings account, or it's deposited into a payroll account that you use and not your operating account. That really, to prove it, you're going to have receipts and documents.
Yeah.
But for those that as Nancy said, to safeguard that you're not using the money for purposes other than what it's intended to. Maybe if it helps you not have it in your operating account, then you can keep track of really, you know, a better use of the money, or the intended use of the money.
Especially as things change too. It all came in and out of one area. So when you have to go back because things changed or rules, you know, whatever, you have one account to go to.
Yeah.
Try to, it's called to keep it as simple as possible, right?
And for some of us, creating another account would make it more complicated. So whatever works best.
So
Yeah.
Susie, I'm going to hand this back over to you, hopefully.
Yeah.
And so I'm going to.
Well, this is on your screen, so I'll just have you. You'll be my Vanna now.
I'm going to be your Vanna. Okay, I can be your Vanna. I'm going to try to be a better Vanna than you were. Okay.
Well, maybe, perhaps. Okay.
I
So
don't know.
if you
We'll
can
see.
So the
Okay.
thing is that again, documentation, now that you, if you were fortunate and you received the money and you're going to ask for forgiveness, the key is going to be proof. You're going to have to show that, not only tell them that you used the money in the manner that it was intended, but you're going to have to prove it. And as Christy had said before, some of that is going to come if you use a payroll service. They're going to help you with the payroll part and the reports. You may be asked to show, if you actually write physical checks, you may have to provide copies of the front and back of checks to prove that you did that. But this is where it's going to be super important that you have well documented and organized paperwork or proof, so that you only have 60 days from the point where your lender lets you, where the lender's going to tell you when that 60-day clock starts running for you, which is going to be at the end of the 8 weeks. They'll tell you what their process is, but I'm going to absolutely guarantee you, you're going to have to there's going to be a lot of documentation that's required to prove that. So if you're someone who their joy is not in filing paperwork or keeping track of things, just try to sort of up your game on that, because the better organized you are, the better the process will be to ask for forgiveness. So next slide, Nancy.
Ready?
Yes, please. So again, with record keeping, there's certain documents that you're going to be asked to provide. This is not a list of everything. This is just giving you some ideas. So they are going to ask payroll reports from your payroll provider. If you're the payroll provider, then you have to have documentation. As part of the forgiveness part, there's a lot of information that's asked. When did you first hire the employees? What was your original count? Who were those employees? Who was let go? If it, are they still being paid the same amount as before you received the funds? So there's a lot of sort of HR information that you're going to have to keep, and a lot of that you can get from your payroll provider. There's also reports you're going to have to provide, such as your tax filings, your Form 941. When it says from a state perspective, really what they're talking about is what's going to be able to be forgiven is if you're paying into the state unemployment, because that's the only cost as an employer that you have that you're going to be able to deduct. And for some of us, depending on the city we live in, we may have to pay an occupational privilege tax. So the company's portion of what you contribute to that is also, those are really about the only two that I can think of that would be considered state or local taxes. Any amount of Social Security and Medicare or federal unemployment, any of the federal taxes that a company pays on behalf of their employee is not forgivable in this under the Payroll Protection Plan loan forgiveness. Any benefits that you pay on behalf of your employees, so health insurance, or perhaps you contribute to a 401k for them, anything like that that you've been doing typically, those are things that are also going to be able to be forgiven on that. Next slide, Nance.
So
now what I'd like to do is on the tracking and the forgiveness, you have to remember that what you track may end up not being, even if you spent it, it may end up that will not be forgivable. And one of the biggest things that I've seen there is that even though you spent it, it could be a reduction in your workforce. And so for every reduction, there's a percentage that they take off, and it's, so you just have to be real careful on understanding how that's going to affect what may be forgiven. What I want to show you now, so I'm going to share, can you stop sharing, please?
Susie, you want me to stop sharing my screen?
Please.
All righty.
All right. So can you see my screen now? No? Okay, we're going to do it. We're going to get there. Screen. Hold on. I got to find it on my... I don't know why it's not. Oh, change presenter. Okay. Show my screen. Now is it working?
Yep.
So you can see the spreadsheet?
Yep. Can we make it
Okay.
bigger?
I can try. Oh. Did that help?
No. I can make it bigger. You can make, we can, go ahead.
Okay, sorry. All right. Well, if you can't see it, it's not going to be very helpful.
I can see it better now. Okay, we're good.
Okay, so
Technical issues.
what I did is I created a couple spreadsheets. The first one I'm going to show you. So this is just for you to keep track, if you did receive the PPP loan, how you're using the money. This is not going to be a part of the forgiveness, but it's going to help you keep track of how much did I receive, when did I receive it, when is my 8 weeks over, and how much money do I have left in the PPP fund or funding at the end of any given period. So as we said, follow the yellow brick road. On here, again, anytime there is a yellow cell, that's where you're going to put your own information in. Where it's green, that has a calculation in there for you. It has a formula, so you don't have to do it yourself. So in here, it's real important. Remember, when did you receive the money in the bank? And so here I said, well, it was on April 1st.
Susie?
Yes.
You have to zoom because they can't see.
What's the matter?
Zoom, maybe select just everything that they need to see in the,
Woo!
yeah.
Oh, there you go.
Okay, so hold on, let me change my, oh, this is so silly. I think that's too big though. Okay, so what if I zoom?
Can you use that little tab on the bottom right? Does that mess?
No, that didn't work. Okay, so now,
Do the custom, do 150 and see what happens.
Okay, thank you. We're getting there, guys. That better?
Is that better? Good.
Sorry about that. Thank you. All right, so Yellow Brick Road, this is the date that we recorded that we received the funds. This is how much was received. So, and then we have week 1, week 2, week 3, week 4, week 8, yes? If you want, you can insert a row And you could actually put what the pay period was if you want that. So you can make some modifications if you want. But what I was suggesting too is that what's my week as starting as April 1. So it's not Sunday through Saturday. It's 7 days of a week. So I start to fill that out, and that helps me know when my 8-week period is over. So here's my beginning balance on the beginning of that week. Then I can show if I have wages in week 1. In this particular case, I didn't pay any wages in that first week. So I don't have anything there. If I don't have wages, I don't have any of the associated tax expenses, but I did pay the health insurance premium that week because it's due at the beginning of the month. And I also paid rent. So then it's going to total for me what my total payout is for that week. So if you're someone who has tucked the money away in an account so that you don't spend it until you use it, then I could look at the total payout at the bottom of each week, and that is how much I would transfer for that week to cover my expenses that are going to be hopefully forgiven in the PPP loan. Then it's going to also tell me how much I have left at the end of that week available to go forward. Then I go into the next week, and it updated my beginning balance for me, so I can see it in 2 different places. And then in this week, I did have payroll. This was my total wages. Where am I going to get that information? Maybe your bookkeeper or someone doing the accounting. Perhaps it's going to come from your accounting program, and I'll show you an example of that. Or maybe it's coming from payroll reports. So this is a really good time that if you don't know where to find this information, you can schedule an appointment with Christy or someone at the SBDC, or ask a bookkeeper, ask your CPA. This is a good time to ask for help if you don't know how to get this information. So here then, so you can see this again, it's state unemployment because that's the only state tax expense that the company has. And here would be the company's portion of what are occupational taxes. So in Denver, it's $4 per employee per month. So we paid 2 employees, there you go. And it totals for me what my total employee, so payroll expenses are. You can add lines. If you have a different benefit, you can change them. Maybe you don't have health insurance, maybe you don't pay retirement, but you pay some other sort of benefit. You can change that. You can add lines. Down here then, and this week we already paid our rent, so we're good. So again, if I was going to keep track of how much did I spend within that week, how much should I transfer from my safe account into my operating account, this would be the amount for that week. Over here in the total, it's telling me what my running totals are. So at the end of this second week, that's how much I have left of my original loan. And that's also here in the total. It shows how much I've done in wages for the full 8 weeks or up to whatever point I'm at. And then this is the total that I've used. And this is what I have left. So it gives you some, it's going to do some of the math for you. The other thing that I've done is I built into this on the total section, I'm having it show you what percentage of the total of this $33.84 that I've spent, how much of that is payroll and how much of that is in the other expenses, so that you can keep track of this 70-25. Don't panic at this point that you're not at the 75-25. Because you're just 2 weeks in. You're only going to pay rent once, right? So chances are by the end of the 8 weeks, but keep track, because in the forgiveness part, if you exceed If you don't meet the 75-25, then they're going to discount how much of your payroll expense is going to be forgivable. They're going to shore it up, that they make sure that 75% of what they forgive is payroll and 25% is other expenses. So it's real important to keep track of that. Just don't panic yet because you're early enough in the process. So I'm going to show you another example. If you're using an accounting program, and in this case I'm using QuickBooks, and I hope you can see that. I hope it's big enough. But I can look here and maybe I'm going to look at my profit and loss statement. Now, this only works if you keep your bookkeeping up on a regular basis. So if you do, if you write your checks out of your QuickBooks program or whatever your software is, then you could maybe look at, so I'd say the first week is I put in my dates for that particular week, and I can look, here's my health insurance costs, and here's what I paid for rent. So there's a couple different ways for you to keep track of that. Maybe it's just when you write the check, you put it in the spreadsheet, you know, because you're not quite to this point where all your bookkeeping is up to date. So this can be a tool. It's not going to tell you what the forgiveness is. It's going to help you try to keep track of what your running totals are. It's really more to make sure part of what this is we had $23,000 available from the PPP funds. How are we using that money? And then it will help you to figure out how and keep you on target of what you said, you know, what expenses you included when you were asking for the PPP loan. Then I have a second spreadsheet for those of you, oops, I didn't mean to start Teams, that'll be interesting. For you that are self-employed.
Okay, make that one bigger if you can, Susie.
Yeah, I'm going to, thank you. So, except you can't see it, so let me make this bigger. Oh, where is it? View. Well, okay, is that better? And then maybe what I can do is
do that 150%.
Yep.
Just give her a second.
I'm getting there. Ta-da!
Ta-da!
Okay, so with this use of funds, it's a little bit different because as we talked about, you don't give yourself a paycheck. Oh, there goes Teams. Okay, you don't give yourself a paycheck, so you don't have all of the payroll expenses that you're going to track. Now, maybe you have payroll and but you're not an SCorp, so you may have employees that you're paying, but you also, as an owner, just give yourself a draw. So we can work with you on adjusting the spreadsheet to accommodate that. But in this case, we're just going to assume that you don't have employees, that you're just paying yourself. So one of the things that I did at the bottom here is I put, what was your net profit for 2019? And then I put in here, this is your full 8-week calculation. So I did the math for you to let you know what that would be. This is probably all, it should match what you did with your PPP loan application also. And in here, so there's a question of how am I going to, when it comes to the point where I have to prove that I paid myself, and so that I can get the PPP forgiveness on my owner's profit that I paid. In this case, I just put it all in the first week, but it may be better if you split up the payments into 8 equal payments. And then however you pay yourself, the best thing you can do is write yourself a check. That way you have a physical document that the IRS is and banks are very accustomed to using as a form of evidence. If you are, some of us may be sole proprietors and we don't we're using the same bank account for business and personal. I would suggest you never do that, but so you're going to have to figure out how you're going to prove that you paid yourself your part of your profit. And in here it still does the same running total, just as everything as what we did before. It'll keep track of how much, in this case, how much you use in that particular week. And again, I would say I would probably separate that over 8 weeks and just be a little more reasonable, or maybe pay yourself every 2 weeks, something like that. So this is a tool just to track the use of the funds. And in this case, you can see, because I put it all into the first week, if the only thing that you're going to do is how much you pay yourself in your rent for that 8-week period, you can see that you don't meet the 75-25 split. So you'd have to perhaps pay less rent to get yourself closer to that percentage. And I think I have to fix the calculation here for you. So, but you can see, so be careful, really pay attention to this split so that you don't get yourself.
Yeah, because about halfway through, you can start making decisions that are going to be proactive instead of reactive. So you're like, okay, I'm creeping on this part, so maybe I need to stop using these funds so much for this or whatnot.
Right. What do I, and use this, you can use this as a tool like I'm doing here to see when you play along. Like I said, I need to fix my formula here for you. I can see when I get to that, at what point am I going to hit that 75-25?
Mm-hmm.
And then just remind yourself that $10,000 may not, even though you reached all of, you spent it all, it may not all be forgiven.
But then it basically is a 1%, whatever that remainder is a 1% loan for 2 years that you don't have to begin payments on, although that 1% interest is being accrued. You don't have to pay on for the first 6 months.
Right. And
Which is the best loan you'll get anywhere.
Trying to figure out how much
loan you'll get anywhere.
Yeah, you don't get a loan like that anywhere. Your mother won't give you a loan like that. So.
No,
I've asked.
But the other thing too is if you're going along and you're using the funds and you just never get to that full amount, then this is going to help you know how much you maybe have held aside. You had it in a separate account, and you could just pay that back right away so that you don't get charged interest on it. So I think
your bank would love that.
The other thing I want to tell you is if you are using an accounting software, the one thing you have to know is that was that loan recorded correctly in the first place when those monies came in? It is not income to you. At this point, it's a loan. You don't know if any of it's going to be forgiven, if all of it's going to be forgiven. So what you want to do is if you're doing the accounting or you have a bookkeeper that's doing it, if you go you can look at the balance sheet. Oh yeah, or you can get kicked out. So what you want to do is you're going to record that as a loan payable, because at the time you got it, that's what it is. It's not income, it's a loan payable. And then you're going to figure out how much of it is forgiven, how much of it. So some of that may remain a loan and some of it may be converted to income. But when it gets converted to income, all right, quick. Oh, this software is delightful. what I'm being told is that when you could, so let's say you got a $23,000 loan and 20,000 of it is forgiven and 3,000 of it stays as a loan on your account. So here it is, my 20, it's a liability and an equity. So it's a liability account and it's 23,000, sorry. So here I can look at my balance sheet and I know it was recorded correctly. Which some of this may get 100% may be converted to income, other income on your profit and loss, or some of it may stay there. But don't worry, you're not going to get taxed on it because you'll be able to offset that. Whatever gets converted to income, you'll be able to offset it by the expenses that you use that money to pay that were forgivable. So I think
got some questions?
Yes. Okay, so someone's asking if the interest expense is anything for like business American Express. It's not for credit card interest, correct?
No.
correct. It's only if you have a real estate mortgage, or if you finance large equipment or a truck, something like that, but not on credit card debt, or not on if you took a cabbage loan for cash flow purposes, something like that, that doesn't count.
Okay.
If any of you have an SBA loan, I'm assuming you've been informed that they have deferred those payments for I think 6 months as well. So if you have an SBA guaranteed loan, yeah.
Okay, perfect. And then the payback, the 8 weeks starts on the date you get the loan, correct?
Correct.
Okay.
That you receive
It goes into your account, right?
Yes.
Yes.
Right. So someone asked, they received the PPP loan on April 15th, but don't begin to plan using it until June 1st. But it would start on April 15th when she received the funds, her 8 weeks.
That's when the 8 weeks starts. But if you really don't have any expense until June 1st, then you're not, but you have to be careful because you're 8 weeks. You have to use it within the 8 weeks.
Starting April 15th, not June 1st, which is when she started using it.
Right.
Correct.
Not when you want to start using it, it's when you receive the money.
Because
Right.
again, they're trying to stimulate the economy within a certain period of time, or to keep not stimulate, to try to stabilize the
Right.
economy within a certain period of time.
Now you could prepay some stuff,
As long as it's reasonable.
like if you had insurance or things like that, you could prepay, right? I mean, I know that doesn't go with the PPP, but I was using that example. But
I think I would be real careful on that. I would be careful on that. If it's reasonable for you to pay your rent, for instance, I have a client who's self-employed and got the PPP loan, and part of that was rent, and he was just like, within that 8 week period, I'm going to have 2 months worth of rent due. So I'm just going to prepay it right now because I want the money out of my bank account. I don't want to spend it. I want to know that I used the money correctly. But I think you have to be careful if you say, well, what if I prepay my July and August rent? I don't know that I think you'd have trouble with that.
No, I mean, as long as you stay in with like the 8 week period, 2 months, whatever. So 2 months of rent.
Yeah. If you, and I would think, I don't know, I'm not gonna, I didn't.
Yeah.
I could try to reason what I thought would be, how we could story match the answer that we want. So just be real careful, and your banker is going to be the one that's going to be able to give you some good guidance and keeping track of what's coming in through the SBA and the Treasury Department as to what the guidelines are.
And there's also nothing wrong with documenting why you came to a decision.
Correct.
Right? So like why did I decide to do that? So then if you're ever asked, why did you make that decision? You can go, well, I based it on XYZ. So there's nothing wrong with documenting basically your decision-making process in this as well.
Right, you just don't know if it's a guarantee that then that will make it eligible for forgiveness.
Right, right.
The other thing, and Colleen, we'll let you get back to questions in just a second, so part of the problem too is the whole discussion of cash versus accrual, which means if I got my funding on April 1st, and I just paid my employees or whatever, so I missed out on that. But let's say towards the end of the loan or the end of the 8-week period, I haven't used up all of my PPP funds with the actual paychecks that were issued during that period. But maybe I end my payroll period on the 20th of the month, because that gives me time as an employer to prepare my payroll. So we usually there's a week to 2 weeks lag time between where the last day that the employee worked that goes on to their pay period for the next paycheck. So if I end payroll so the cutoff date for the pay period is on June 20th, but they're not going to get paid until maybe into the first week in July. So what you could look at is that would be on an accrual basis, what did they, from the date from April 1st through my 8-week period, what did they earn during that period that I've either paid them or I'm going to have to pay them. So you can keep track of what they've earned and you haven't paid. So I would track it by pay period dates as well as paycheck dates to find out which direction they're going to go, whether it's accrual or cash. So whether you paid them or not, did they earn the money and you're still going to have to pay them, then as long as it falls, they earned it within that 8-week period, I believe you're going to be able to take that as a deduction. You're going to have to prove then that you paid them, that you didn't just accrue it, but you actually paid them later. But that can be a way for you to take advantage of the full 8-week period if you got the money right after you just closed out, you just paid everybody. So it can carry forward based on when they earned it. I hope that's clear.
Colleen, questions?
Colleen, yeah.
Okay, so on the equipment, is it just the interest or the loan payment for the equipment? It's just interest, correct?
Just interest.
Okay.
So that's an important thing when you're recording your accounting. You would do it for tax purposes anyway, and for a lot of reasons. But make sure that you know when you make a payment, a loan payment, you have to separate how much of it was paying down the interest on the loan and how much of it paying down the principal of the loan and how much of it was interest expense.
Right. Okay. I don't see, all the other questions are pretty much specific.
Okay.
We can start doing some of those if you want, but we are at our 2 o'clock. We're at 2.
Okay. Wow.
Well, you keep my
Well,
yeah. So again, I wish my technology worked better. So again, if you need help on this, call and make an appointment. If it's a specific accounting issue, you're going to probably want to talk to some of our people who have accounting experience, and actually we have several that understand a lot of this. So you would make an appointment with them. I would also say use this time, this 8-week time, if you have this loan, use this 8-week time to not only think about today, but think about strategy and how you can use this time to figure out your next step, okay? And some things that you may need to change or recalibrate, if we will, in your business model as well. And we can help you with that as well. So I think that's it, guys. Are we
Yeah.
done?
That
Guys,
was good.
All right. Thank you, everybody.
and we'll figure out how to make the recording available. We've got
Yeah,
genius.
they'll do that for us, and then we'll also give you all of those
The
websites.
handout.
Probably try to throw in a few more for them too.
All right.
Okay. All right, guys.
Bye, guys.
Bye-bye.